You're here at the Nekkid Trading webinar. My name's Walter, and I'm glad that you're here. Thanks to those of you here live and those of you watching the recording. I wrote the book Nekkid Forex, and I'm a full-time trader, and today we're going to talk about getting started. We want to talk about different Nekkid trading systems that you can look at, that you can refine, you can test for yourself, particularly if you're new to Nekkid trading and you don't know where to start. So, and I'm happy to take a look at any of the charts that you guys want to post in the chat. So that's totally cool. So the way that this typically works is, we'll go over the points that I want to cover, and then at the end, if you want to take a look at live charts, or we could use even live chart examples, perhaps, depending on if it fits the criteria. I have several trading systems or trading setups. Really, it's up to you to create the system, I suppose, because the exit, the risk management, the rules around the, how many trades you have open and things like that, that's going to be up to you. But what I want to do is give you basic ideas that you can implement in your own trading. So I am excited to have you here. So what we're going to do first is we're going to talk about the different types of markets. Now, one quick and dirty shortcut that I like to use is I use the open position ratios. It's a page that it's a screenshot of a page. I just took the screenshot a minute ago that my programmer created, but you can find these same data if you just do a search online for IG markets and then any currency pair. So if you look right now, if you look up IG markets and Aussie CAD, you'll find that 77% of the traders at IG markets are currently long the Aussie, short the CAD, and 23% are short the Aussie and long the CAD. Now, I always want to be in the small group here, particularly if the chart looks like it is bearish. So, for example, if the Aussie CAD looks like it's going down, and it does, this is a chart that I'd like to sell. Now, I do note, it has been noted that we have this low here, and we're probably going to find some buyers come in here. But that doesn't mean that we're not going to break through here. In fact, I would anticipate that we would break through the bottom here, but there might be a pullback. So I really like to use open position ratios. I like to wait until there's about 70% of the market participants in the retail markets. That's important. Retail traders we're talking about here on one side, and then I like to go on the other side. But there's certainly room to trade, markets that don't have a large majority on one side, like, for example, the Aussie Kiwi, and I think we can talk about that in a moment. All right, so I like to use open position ratios to identify the trend, or the likely, it's not always going to be trending, but the likely trending. So, for example, the Swiss yen, you can see 74% of the traders are short, so I want to be in the 26% that are long. And guess what? The Swiss yen actually, right now, is not really an obvious chart to trade. So it's not one that I would be trading right now. I would kind of wait, at least on the 12-hour here. I'd wait to see if it can show me something better later. So let's talk about the different types of markets that we see, and then we'll look at different types of Nekkid trading setups that you can use to trade those various markets. So first, let's talk about the, actually we can do it on this chart because we have a big open area here. So we'll use the Swiss yen as our whiteboard, so to speak. So the first type of market is range bound. And a good example of that right now would be, usually, but not always, it's going to be the ones that are white here on my page. So like the Aussie Kiwi, or perhaps the pound Swissy, or something like that. So I want to show you the Aussie Kiwi because I think this is a good one, or it was at least last time I checked the charts during the Asian session. Yeah, it still is. Okay, so during the Asian session, I was looking at this and I was thinking this could be a pretty good opportunity for a buy down here. So during the Asian market today, the market was selling off, and I think it was this candle that was printing when I was looking at it earlier today, and it was looking like it may come down here and tag this area where it bounced there and it bounced there and so forth. And that to me would be a great spot to buy. Now it didn't quite get that low, and maybe it still will come back down and make another low and scoop into like the 105.79 or 105.83 area, and that may be a good place to buy. So what I would look for there is a candle kind of like the one that printed right here, this kangaroo tail looking candle, where we have the open and the close up in the top third of the candle, the open and the close are inside the previous candle's range. There's a long tail that penetrates the lower edge of the box here. So you kind of want to see that tail go beyond the low of the box, kind of like this one did, although this is not a kangaroo tail because the open and the close are not in the top third. I think the open is probably outside of the top third by a good mark. But that's the kind of candle that I'd look for down here. So that is the first type of market, which is basically, it's called a boxed kangaroo. So I'm looking for a kangaroo tail at the edge of a box, and I want to see my numbers, my open position ratio numbers, which you talked about. I want to see those I want those neutral, which is exactly what we have here, right? The Aussie Kiwi numbers are in fact neutral. 54% short, 46% long. That is by definition a very neutral market. So that's exactly what I'd be looking for. And now that I can draw a box around this 1 hour chart, I can say, yep, this is a very obvious range bound market. And certainly if it gets back down to the bottom here, I would be looking for a buy, especially if it gives me a nice long-tailed kangaroo tail. Same with the top. If it comes up to the top and prints a kangaroo tail reversal up at the top, I would take that as well. Here's an example of a kangaroo tail up at the top. It didn't quite get to the spot where I would be interested, but that was also early in the box, so we weren't really looking for one there. Now we know that we have a box, right? So this kind of a candle, if we could just kind of cut and paste it up here, would be ideal. Are there any questions about that? Does that make sense? So there's basically a couple of elements here. Number one is the open position ratios suggest range-bound price action. So OPRs are near 50-50. So that's thing one. Thing two is we have a really well-established support and resistance box. So established box. And then thing three is we get a kangaroo tail printing at the edge of the box. And then we go, go, go. Now, prints at edge of box. Now, in this case, I would probably move to break even when it gets to this red line. The red line is just simply the midpoint of the box. Typically, this one's pretty hard to see, but typically, I mean, you could argue that it could be a little bit lower actually than I've drawn it. Typically, it's around the midpoint where you see a lot of support and resistance. Some people may look at this and they would disagree and say, no, it's probably right here. And to be honest, that may be a good spot as well. I did draw it up here, though, to try and capture these lows, these touches there, that little jig there and there, those touches there, and then this one right there. So I drew it right there, but I could see where you would, possibly draw it in a slightly different spot. So in this case, for this pair, to be clear, what I would look for now would be a retrace move back down. Maybe during the New York session, we see it sell off and come back down here, and then maybe we would get that kangaroo tail where it extends beyond the low of the box here and then snaps back up. And then I would put my buy stop above the kangaroo tail, my stop loss down below the kangaroo tail, and let it ride. Now, if the kangaroo tail did not go as low as this low over here, I might actually use that as my stop loss. But the idea here is that it'll probably at least go to this spot before reversing like it did last time it hit the edge of the box. And so you could take some profit or move to break even and see if it'll ride all the way to the other side of the box. So in that case, you're probably looking at a trade where it'd be roughly, 10 pips of risk to make 30, or even 10 pips of risk to make 50, 55, something like that. So it's pretty good reward to risk ratio in that case. Now this is a lower time frame box, but certainly you could make the case for higher time frame boxes as well. Like there's nothing wrong with that. So that is one of my favorite methods for trading range bound markets. And I know a lot of people use, I guess they use like Bollinger Bands or channels. Channels can work too. I just think that horizontal support resistance is easier for more people to see, so it's more reliable because we all see it, or many of us see similar areas. Whereas with channels, it gets a little bit dicey when you start drawing trend lines. Some people don't see the same lines that you and I see, if that makes any sense. All right, so we're going to move on, and we're going to go to trending markets. All right, so remembering the open position ratios, a couple of trending markets right now, according to the numbers, would be the bullish trend on the pound New Zealand and the pound yen. Now, these would be really good opportunities for pullbacks and bounces. Now, I want to talk about something because this. Okay, so trendy kangaroo tails. Actually, let me show you. Didn't we have one on oil? I think we did. Yes, we did right here. All right. So this is kind of a textbook trendy kangaroo tail. We had a different trade over here on this candle, but we're not going to talk about that. What we want to do is talk about this one right here. All right. So a trendy kangaroo tail is, I actually, the boxed kangaroo tails are not in the Nekkid Forex book, but if you've read the Nekkid Forex book, you know about trendy kangaroo tails, which is the market's going in one direction. There's a pause where you get a bunch of little tiny candles, often neutral, and they'll often rotate colors. Like here's an up, here's a down, here's a neutral, there's an up, there's a down, there's an up, there's a down, down, up, you know, and then boom. Now, what's nice about this is it takes out the lows of these little candles here. The biggest candle is this one, and the kangaroo tail clearly takes out that low, which is what you want to see. You want to see the kangaroo tail have the lowest low. Now, it's not going to have a lot of room to the left like a standard reversal kangaroo tail would have, like this one, for example, down here. This actually, it's not a kangaroo tail, is it? Because I think the close is outside of the previous candle's range. So this would actually be what we call a pseudo kangaroo tail. We can talk about that in a moment, but this is West Texas crude. Yeah, this is West Texas crude. That's what this candle is right here. We'll talk about that in a second. So that's like a reversal setup. But you get a bunch of neutral. So the market's going in a trend, or it looks to be making higher highs and higher lows, or lower lows and lower highs. But then it pauses, and usually I like to see probably 3 to 4 minimum before we get the trendy kangaroo tail. In this case, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, and then the 10th candle was the trendy kangaroo tail. So that's pretty nice. Maybe a little bit late, a little bit more, perhaps a few candles extra, you know, but whatever. It's good. It's definitely within the range of acceptable trendy kangaroo tails. Then you put your buy stop above the high, stop loss below the low. You want to make sure that you do have room to the left. In other words, it must take out the lows of the consolidation zone, and it does. And then it goes within 2 candles. In fact, I think it goes on the very next candle. If not, then it would go on the next one for sure. And it's off to the races, right? So that is what we would call a simple trend continuation pattern. So if you like trading range-bound markets, the box kangaroo tail is a good setup. And if you like trading the trend, a trendy kangaroo tail is a great setup as well, right? So that's a really easy way to see when the market is offering you an opportunity to get in on a pullback. And so it's basically a very simple end of pullback sort of signal. It's not totally 100%. You're going to get some losers for sure. Let's see if we can find one. I suppose you could argue that this is a trendy kangaroo tail, but it doesn't trigger within the next 2 candles, so that's no good. Let's see here. Here's one right here that probably would have been a loser, assuming the close is inside the previous candle's range. I'm not sure that it is, but it doesn't really matter. Let's say that it is, and it goes on the second candle here. This one it doesn't go, this one it does, but it just gets here, bounces around, and eventually it falls down here and takes out the stop loss. So that would have been a loss for sure. Here's another trendy kangaroo tail here. This is a good one. Actually, the close is not inside the previous candle's range, but the previous candle is really small. So again, when the previous candle is really small and the kangaroo tail doesn't have an opportunity to close within the previous candle's range, we call it a pseudo kangaroo tail. And those, to me, those are definitely viable. I've tested those. I've traded those. I like these as well. But anyways, this one goes on the second candle, takes out the high, and it never really takes out the low. It does get a bit stuck here in this big channel, but then it goes, and it goes nicely all the way up to here. So that's good. That's a good one. I'm trying to find a bad one. I'm looking for a poor one here. Here's one. So this is pretty good. It's been making higher highs, higher lows, and it consolidates for 5 candles, prints your beautiful kangaroo tail. Now it just barely does take out this low. It would have been nice if it was a little bit lower, had a little bit more wick to it. Anyway, it goes and then boom, stops you out immediately, and then takes out and then hits this level up there. So that would have been a bit of a bummer, that one. But that's kind of what they look like, the losers. Does that make sense, everyone? All good on the trendy kangaroo tails? Let's talk about reversals. So with reversals, let's just pick a random chart here like the kiwi. With reversals, the idea with reversals is that I'm going to look for a nice bounce off of a support or resistance level. So the most important thing is that where the reversal occurs is a support and resistance level. So actually, let's pull up a 4 hour, see if we can find a little bit more action on the 4 hour. Probably should have opened up my 6 hour charts, but I've been trading the 12. Okay, so here's, no, that's no good. That's more of a continuation pattern. So really what I want to do is I'm going to draw in my support and resistance based on my line chart. So I'm just going to draw my horizontal support resistance. I'm going to back this up, make sure I'm very clear on where my support and where my resistance is here. And then we can look for spots. Probably would draw one here. And probably would draw one there. Also would likely draw one down here. All right, so that is where I would draw my support resistance levels, and probably also would have one up here. All right, fine. So now I'm going to go down to the 4 hour, and I'm going to look at my candles, and so now I know where I'm looking for reversal. So any sort of a kangaroo tail down here would work, or up here. So here's one. This is a beautiful one. Didn't work out very well, but this is the kind of thing that makes a lot of sense in some ways. There are some clues here that this is a bad signal, like this big bullish candle and then the pause here and then another bullish candle up here. That's a bad sign, but it did then print a bearish candle and a reversal here, a kangaroo tail reversal. So in this case, the stop loss goes up here. You can see it does have room to the left because the tail is so big. It takes out all this area here. So it has this much candle. Hey, Sunil, like that. See how so this is the signal candle right here. This is a reversal kangaroo tail. We'll just assume that the open position ratios are neutral, that we don't have any reason to go long or short. We just like, well, if we had open position ratios that suggested to take a short, that would be great, or neutral, either one. Neutral is great, though, for these types of trades. So what we have here is a long tail. It takes out these orders that are up here with the long tail, and then the very next candle goes lower, and it looks pretty good. It did snap back up. So I'm thinking, yeah, it's probably going to get to like down in this area down here at the very least, maybe even a bit further, like down to this area down here. That's what I'm thinking if I take this trade. But unfortunately, the answer is it's not going to do that, and it takes off and stops me out over here. But that's the kind of reversal. This would not qualify right here, this one, because it's just too small. I don't even know if the open is in the bottom third of the candle. Let's keep going here. There's one, but it's not really on the zone, so that's too bad because it's beautiful looking, but it's not really in the right spot. Let's see if we can find one here. One down here would be nice. There's one. So we're down on the level that we've identified. Now, I'll tell you why this is not so good. Thing number one is the candle before it is super bearish. That's bad news. Thing number two is we really would like to see the candle go through the zone. Now, there is an argument to be made that perhaps the zone was drawn in the wrong spot. Perhaps the zone should be drawn a little bit higher, say up in this area here. If it were drawn there, it would have penetrated the zone. You can see it actually lines up with the candles a bit better. So maybe what I'd do is I would go back and see if that makes sense. But let's just say that we decide to take this one, but we're going to get stopped out. It goes right away and then stops us out. Yeah. Yep, no bueno. Really, the spot for it would have been down here. Kind of like if you added these two 4-hour candles together, you would get a kangaroo tail right here. But ideally, the zone would have been about there for that. If you add these two together and you get like an 8-hour kangaroo tail, ideally the zone would have been something like that to capture that one. Here's a little trendy kangaroo tail right there. Here's another trendy kangaroo tail, but not very nice because of the big candle before it. There's a reversal right there, and that one actually comes good. It goes all the way up to here, which would have been good for about 1.5 R, I suppose, something like that. Did not take out the stop on this pullback. In fact, it goes a little bit higher over here, and then it finally falls through. So that might have been a small win or a break-even trade, depending on how you manage that. Okay, so I think you get the idea. So the idea with the reversals is, with reversals, I like neutral, open position ratios, and on a support resistance zone with really, really nice looking a wick that takes out the previous highs to the left. You want to see it take out the low on a sell signal within 2 candles or take out the high. Again, don't take my word for it. Test all this stuff yourself. You can use a simulator like Forex Tester and see how this works for yourself. But it's a great way to trade. Directionless markets just bouncing off of these zones, kind of like what we talked about with the box kangaroo tail. So I don't see any here. I don't see any there. This looks like it could be a pullback and then it falls. No, it's consolidating now. There's one. This would not be a trendy kangaroo tail. Why? Because see how these candles are going up? They're not in a like horizontal little box. It's more of an uptrend. So that's a bit weird, that one. Also, this wouldn't qualify because the market to the left is consolidating or moving down, and there's only one candle to the left where before this. That would not be a trendy kangaroo tail. That's a reversal. That's a really nice one off of these lows, but that wasn't identified as a zone beforehand, so I wouldn't be able to take that one. Okay, so that's basically reversals. Big shadows are another way to do this. So big shadows are some of my traders who have done the best. They use big shadows. They love big shadows. They're a big deal. There's one right there. Look at that. So this big shadow right here, this is interesting because it kind of this kind of setup is like it's like a breakout. So let me talk about what I've been looking at on the euro. First of all, the euro pound has been bearish. So see these numbers right here. So it says 83% long. So I want to be in the 17% that are short the euro pound. I don't want to be in this 83% long group. These are the losers, right? So I don't want to be in that group. These are the guys that are fading the trend. So I like this euro pound as I like it to breach this big channel. So I got this big channel here drawn on my 12-hour euro pound, and I have been expecting for some time now that the euro pound is going to break through here. But now we actually have a beautiful looking big shadow, which I didn't realize yesterday. I think this was actually looking like a kangaroo tail yesterday when I saw this less than 24 hours ago. Yeah, that's interesting. This candle right here is brand new. The new 12-hour candle just started printing. You can see it's got 693 minutes to go, whereas the first 12-hour candle of the day is already printed down here. But this big shadow, so big shadow rules are as follows. We look for the biggest candle we've seen in a while. So the biggest candle in the last 5 candles, 10 candles, something like that, right? And what I mean is the widest range. So the widest range in X number of candles, whatever that is. Then it has to take out the high and the low. So the open and the close are the high and the low, not the open and the close. The high is higher than the previous candle. Likewise, the low is lower than the previous candle. Now, this one's a bit weird because normally you'd want to see these at extreme lows and extreme highs. I suppose you could argue this is at an extreme low, but it's not a bullish one. It's a bearish one. So what we're saying is that the market's been sitting down here at the bottom of this channel for ages. Remember, every 2 candles here is 1 day. So these are 12-hour candles. So this has been a long time coming, and I've been waiting for this bad boy to go. And now it looks like we're going to have a signal here. So the high is higher than the previous candle. The low is lower than the previous candle's low, which in this case is obviously true with the little candle there. What's cool about this is that the candle, the big shadow also takes it, like engulfs not only the previous candle, but the one before it, the one before that, the one before that, the one before that, the one before that, all the way back to this candle. So it's taken out 1, 2, 3, 4, 5, 6, 7. 7 candles have been eaten away by the big shadow candle. So this is great. This is great news. So that's kind of what I'm thinking here is that, the market is likely to, the floor is likely to go. It would have been really nice if we had closed lower than the lowest close over here, which is right here at 83.26, and we didn't. Instead, we closed at 83.30. But it still is a beautiful looking candle, and I would expect this to fall quite a bit. Wow. Yeah. Probably pretty low well, we'll see what happens, but in some ways I would expect it to go probably the distance of the channel, so probably 220, 230 pips from here. So this to me is a really good setup. Now the other way to trade this, or at least there's many different ways, but another one would be to wait for the breakout and then the retouch. So we haven't actually broken lower. It looks to me likely to do so, but it hasn't yet. And so another way to do this would be to wait for the market to come down here, close lower than the channel, lower than these lows over here, and then finally come back up and hit the channel, and then the signal candle would be right there. So that's what we call a pinch trade, and normally, you'd look for a big shadow or a kangaroo tail signal on that pinch right there as well. So this would be the more aggressive play, doing the big shadow breakout. The stop loss obviously goes on the other side, so the stop loss would go up here. So like 83, 81. I'll put that on here, actually. I always put my stop losses in red, so that would be a good spot for that. Yes, indeed. So yeah. Yep, that looks good. That looks really good. So we'll see what that looks like tomorrow as well. All right, so we've talked about boxed kangaroo tails. We talked about trendy kangaroo tails. We talked about kangaroo tail reversals. You can also use the same concept with big shadow reversals. This is a big shadow breakout we've just talked about. Typically, other markets where you might see this currently would be like the pound yen. How it's come up against this resistance level. If it comes up there and prints like a big shadow up against this resistance level, that would be, to me, a similar sort of a trade where it would be like a big shadow breakout if you didn't want to wait for the pinch. And then the pound New Zealand is also kind of similar, where it's sitting up here. So if you had a really big shadow pressing up against this resistance level here, again, that would be, to me, a really good opportunity for a breakout trade, provided we see that big shadow. We don't have that yet, but this would be the type of market where that would make a lot of sense. And remember, keeping in mind that both of those have bullish numbers, 76% short the pound New Zealand and 74% short the pound yen. All right, so now let's get into another one that I want to talk about, which is kind of like a, you can look at it as a a breakout or a trend continuation, depending probably on your time frame, how much you zoom in. This is the old drop trade, that old nugget. Let's see if we can find. Let's look at the EuroCAD and the Canadian dollar. Let's see what those charts are currently looking like. Nope. See that one? I'm waiting for a pinch, right? It would come back up and pinch off these. The EuroCAD. No, but that is a very, very interesting chart, but not quite there. All right, let's see if we can find. Nope. I'm going to see if I can find one here. Let's just pick a random one. Them Bitcoins. The Euro Yen. Nope. The New Zealand CAD. I might go, what I'm going to do is I'm going to go to the 6-hour charts. See if we can find one there. So what we're looking for here is a market where it's going in one direction, right? However, we have a pullback and we're waiting for an exhaustion candle and or a breakout candle. They can be one and the same, but normally you have to choose. So forgive me as my charts load. I've got these weird time frames on here. I'm like a dinosaur, right? I don't use any of the new. I use MT4 and I like to use my indicator that creates the 6-hour and the 2-hour charts and things like that, 8-hour charts. But what I'm trying to do here is find a more likely candidate than what we have on the 12-hour. All right. Come on now. So there is the dollar yen. That's an interesting one. Let's have a look at our numbers again. So the euro is intriguing because it's getting close to being bearish. I see. But not quite there. Actually, let's look at the 1-hour euro because that might give us. Yeah, perfect. Okay, so now let's just assume that we have euro numbers that are bearish. We don't. We're sort of borderline here at 64%. So between 64 and 69%, it would go orange. 64 to 69% long, it goes orange. And then once it breaks 69 and hits 70, then it goes red, like the euro Swiss down here. So this is a really good example, this euro 1-hour chart, of what I would be looking for a drop trade. Now, what's nice about this is I see some really nice support here and even down here. So it will look like a yeah, okay. So this is what I'm looking for. I'm going to draw my little trend line here like this. And now the key with the drop trade is you don't necessarily want to see a drop trade where the trend line is super steep, right? You kind of want to see it like I've drawn here. You don't want to look at something that's, like here's a drop. That's not really, that's more of a box. So we'll discount that one. But if I see the market come back down and bounce off my trend line and go back up, that's okay. In fact, it can do it for a while before it actually breaks down. But then what I'm looking for is somewhere down the line here, I'm looking for either like a kangaroo tail, so an exhaustion on the move higher here. Often it will happen on a support resistance level. You can see you've got support over here. I don't know if it would go that far. That would be quite a pullback if it went, another 50 pips up to this area. But at some point, we're looking for an exhaustion candle, like a long tail kangaroo tail. And then we're looking for the market to take out the low of that long tail kangaroo tail, and I can fall. I can trade the fall. Now I could just trade down to the low here, but normally I wouldn't. Normally I'd be looking for taking profit down here at 113.02 or 112.82, something like that. So that's the aggressive method of trading a drop. However, you could take a more conservative method of trading the drop, which would be waiting for it to close below the trend line. So as long as it marches and respects the trend line, that's fine. I'm not going to take a trade. But as soon as I get a big fat bearish candle that actually closes well below the trend line, I know that's my signal candle. But my sell stop down below that, like 5 pips below it, stop loss goes back up above the high. Remember to add the spread. Or it could be another high. If there's another high over here that's higher than my signal candle, that's okay as well. And then I just ride that sucker down to support resistance. So that's kind of like a, it's kind of like a trend continuation. Not necessarily, you don't necessarily have to have a good signal like a big shadow or a kangaroo tail. You can just have a bearish candle that, breaks the trend line. So let's see if we can find examples here on our Euro chart. It's a lot easier if you have a clear, well, here's one. So on this one, it'd be like this candle right here. So let me zoom in. So on this one, the candle would be, the actual signal candle would be right here. That one. So yeah. Here's another potential drop trade right here. You got that going, and then you got this massive candle. Although that wouldn't have done very well for us. I mean, that's pretty big. Wow, that was huge. Yeah, that's huge. So yeah, so that's what the drop trade looks like. Any questions? Hey, Kathy. So does anyone want to look at any charts right now? We can pull up some of the current charts happening right now if you'd like. Why do I have a who wants to type in the chat box a pair that you want to look at? So a lot of people ask about Bitcoin. I am interested in it, and I like what it's doing here. So it printed, if you don't know, it printed on the daily here. I'll show you. On the daily, it actually printed a kangaroo tail, but I said, not convinced. And it turns out there's good reason to not be convinced, because although it printed this kangaroo tail, I said, I don't think it's going to go very far on the retrace before it falls back down. And that's exactly what's happened. So here's your kangaroo tail on the daily, which was a pretty good signal. It's pretty small. I'd like to see a longer tail, but it was off of these lows over here. So it's a good spot for it. And it just went up 2 days and then fell right back down. So I would expect it to actually fall through this floor and take out this low. I think that's what's going to happen. And it may go all the way down to 37. Somewhere around here. There's actually a support level you can find. There's a couple. I think 32 is another critical one. Down around 32 as well. So we'll see, but it looks like it's going to take out that low. All right, the other pairs to keep an eye on are, so we talked about the euro pound, and the pound New Zealand pound yen. Let me go down here to New Zealand Swiss, New Zealand CAD. I think we briefly looked at those, but essentially the New Zealand CAD here could offer a drop trade from where it is right now. It looks like, kind of has that look, and you can see the perfect spot for the drop trade retracement to sort of end would be in this area here, right? Where these lows are. So this would be kind of a perfect little march up here and then falls down. And the numbers, remember, the numbers suggest continued downtrend on the New Zealand Swiss with 81% long. It's pretty good. Another one, was that the New Zealand CAD? Oh, New Zealand CAD, sorry. I said New Zealand Swiss. New Zealand Swiss, of course, is right here. This is a little bit trickier. Now, the way I would trade this is quite different to the New Zealand CAD, because the numbers are bearish, but the chart is not. The chart is definitely a range-bound market. So on this one, I would actually look for a boxed kangaroo tail up at the top of the box. Now, I could get excited about one up here, but I actually would like to see it go a little bit higher and go all the way to where this touch was and that touch was. That to me is a safer bet. So that's where I would look for a sell, up there. Right around there. Okay. And Aussie yen is neutral. This is a neutral market. And if you back it up, you'll see that it kind of seems to be stuck in a bit of a channel here, which to me suggests that the best course of action would be to trade the channel. So be something like that. Yeah. So it looks like it may have double bottomed here, but this move up, if it does break through this floor here, which is a pretty strong floor, as you can see, resistance, support, 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 support. If it breaks through that and gets to the other side of the channel, that would be a great spot for a sell. So yeah, that would be a potential sell there, back down to here or even there. So this is kind of a fun looking chart for trading the channel and or the support resistance. And what else? So we have Euro Kiwi. Euro Kiwi is neutral at 49.51. Don't think the chart's very good though. Yeah, this probably would work on a lower time frame, maybe a 1 hour or 4 hour or something. So Euro Kiwi to me is just a box that's had a few false breakouts, and it's always interesting to me how symmetrical sometimes these look. Like you had this breakout down here, then you had this false breakout up there. But to me, this would be a good spot for a buy. It should bounce pretty hard here. If this is indeed the box, then we should respect it here. We should bounce and go up. Because remember, this is a directionless market. So chances are it's probably not going to go very far. Cool. All right, people. So there you have it. We've talked about range-bound boxed kangaroo tails, trendy kangaroo tails, big shadow reversals, kangaroo tail reversals, drop trades. We talked about trading channels, and I think that about covers it, because you've got your swing trades, which are your kangaroo tails and big shadow reversals. You got your range-bound markets like the box trade, the box kangaroo tail, or the one that we just looked at, the channel. You got your drop trades, which are trending market entries, just like trending kangaroo tails are trending market entries. So yeah, that about covers it. So if you think about it, a box kangaroo tail would be like a reversion to a mean type trade. That's really what that is, and that's what this would be on the Euro Kiwi. If this were to offer a big shadow here or a long tail or something like that at the bottom of this box, which I'm calling it the bottom mostly because of this touch, that touch, and that touch, right? This I'm calling a false breakout, just like I'm calling this a false breakout. And I'm calling the top as this, that. So to me, this would be a great spot for a long tail or a big shadow to tell me, all right, like the current candle. How much time is on the current candle? Yeah, current candle should close in about 15 minutes. Yeah, so this would be a good spot for a reversal right here and go all the way up. Now remember, the midpoint of the box is a spot to keep in mind for, it could potentially reverse there. So let me draw this one in. I would probably draw this one about here. I'd say something like that. Looks pretty good to me. So yeah, that's where I would draw my midpoint of the box. So that's 67.43. Top of the box is at 68 even. Bottom of the box down here at about 66.93 or so. Right about where we are right now. Yeah. All right, cool. I hope this gives you some ideas for things to test if you're looking toward adding some Nekkid strategies to your arsenal. I wish you guys very happy trading. Thanks for spending time here. Thanks to all of you watching the recording too. I wish you a very happy day and great trading this week. And we'll see you soon. See you next time. Have a good one. Bye. Thanks, Adina. See you guys. Bye.